Hello, ladies and gentlemen. Good morning to you all. Kindly confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started. Okay, so what do we have here in the comment section? All right, thank you, Carrie. Good morning, Carrie. All right, thank you for that confirmation, please. Who else do we have here? We have starters. We have 960. Good morning. Okay, good morning, starter. Good morning, Guston. Good morning, Pain. Oh, I hope I pronounced that correctly. Good morning, Danny. How are you doing today? All right, I'll take this as a confirmation. So let's get the session started. I want to welcome you all to yet another promising session on the Extra and Speed Live app, hosted by my humble self, Sheriff Daramola. And in the next 1 hour, I shall be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. We are going to be looking at all the pairs we deliberated on yesterday. We are going to be doing a follow-up detail on all of these pairs. We want to see how well these pairs are doing, and if there are any suggestions or advice, I would be sharing them during the course of the session. So I will advise you to stay tuned in so that you don't miss out on any of these observations that we will be talking about during the live session today. And if you have any pair you want us to look at, feel free to drop it in the comment section and let's see how I can incorporate it into our plans for today and for this week as well. So with that being said, let's dive into the chart and let's see what is going on in the market right now. Well, as usual, the first commodity we are going to be treating this morning is going to be the US oil. And here on the US oil, here on the US oil, we have a pretty interesting scenario here that happened yesterday. So during the course of the live session yesterday, we identified that since the beginning of the week, that price action has been caught within this channel at the $80 area and the $79 area. So we were able to identify that channel, figure it out. So we had a resistance level right here. So we saw selling pressure right around this area at the $80 level, and then we saw buying pressure around this area had the $79 mark. And one thing I stated here yesterday was that we identified a reversal pattern around this area where the $79.30 area was serving as a neckline of that structure. And at the beginning of the week, we saw our price started with a bearish momentum, coming back into the neckline of the reversal pattern that we identified here on the 15 minutes time frame, followed by multiple rejection of this level. And I told you yesterday that we should take advantage of that move, which we did. And remember, I told you to move your stop loss accordingly to lock your position at break even, just in case price might likely drop further to the downside. And this is exactly what happened yesterday. So as at yesterday, we had a conclusion here that we are looking out for either a breakout of the channel to the upside or a breakdown to the downside to incite either a bearish or a bullish momentum from this juncture in the market. And this is exactly what happened yesterday. We had a situation where price broke down the $79 level, did some samples of selling pressure around that area on our lower time frame, and we joined the decline to the downside. And if you look at this pretty well, you can see that our take profit target, which was located at around the $76 level, was quite precise, as we saw how price came exactly into that zone, which was an extension of the previous impulse leg here when we used our Fibonacci extension tool, when we aimed at an area between the 127.2 and the 1414 area. So it was the exact area that our price came into for the take profit target, which dovetailed to about how many pips was that? Over 360 pips on that one. So for those who took advantage of this move yesterday, kudos to you. Congratulations for being on standby to take advantage of that move. Now, immediately price came into the $76 area. We saw a multiple rejection of this level by buyers, but I actually missed this move. I didn't take it anyways. And if you are taking that move too as well, kudos to you for enjoying that, as price came back again into the resistant level of the channel that we identified here since the beginning of the week. So we are at a very critical point in the market right now, as price has continued to trade right around that $80 level in the last 15 to 20 hours now, as we can see here. And one thing I noticed here this morning was that we saw a breakout of this channel around here. Before I go into that details of what our expectations are for today, let's quickly have an holistic view of what is really going on the higher time frame, after which we are going to be coming back here to make a decision for today. So let's dive into the daily time frame and let's see what is really happening there, after which we'll be coming back here to make a decision for today. So right on the daily time frame, we observed well, the most important structure here is the area between the month of September and now. And what we have here, we have a couple of key levels that we shall be using to guide our trading activity. So let me delete this one, as it's no longer relevant at this point. Okay, I think we should still hold on to that. So we have the $85 level, which has been a major determinant of price action in the last couple of months. And if we go as far back as the month of August, we saw how that level was holding buying pressure at one point in time before buying pressure was negated by the sellers around here in the month of September, which led to a final breakdown of the $85 level. And throughout the month of September, price has continued to trade right below that area. So when we fast forward into the month of October, which we saw this engulfing this impulsive move that took price to the upside, which is a reflection of the OPEX Plus decision a couple of months ago. And then we saw another retest of that trend line with an attempt by buyers to push product price further to the upside, but this was met with another resistance from the sellers from that same level at around the $93.50 level. And what this simply tells us is that the sellers are still very strong at this point in the market, and we saw how it pushed price right back into the $85 level. We saw multiple attempts by the buyers to push price to the upside, but this failed, as we saw our sellers took advantage of this and pushed price further to the downside. So since last week trading session, I think since on Thursday last week, we have seen price continue to trade right below the $85 level. So going into the new week, what was our expectation? Well, we identified that price is still around a very strong demand zone, which has been holding buying pressure since the month of September. We saw buying pressure here, then we saw another one here in the month of October, and right now in the month of November, now we saw that price is right back within that zone. And if we look at what happened here on Friday last week and what happened here yesterday, we can see that the candle that closed on both occasion has bullish tendency at this point. Look at these candles here. They close in the form of a hammer candle, which is a representation of possible trace of bullish momentum around this area, which also shares a confluence with a strong demand zone. So we were of the opinion that we might be seeing a situation where price might climb up one more time to do a retest of either the $85 level or probably the bullish trend line here before we start seeing selling pressure on a lower time frame to incite a further trend continuation to the downside. And you know that when we when we witness a breakdown of a structure like this, like a breakdown of a key level like this, we expect that at one point in time price might likely come back to do a retest of that structure to incite a further trend continuation to the downside. So this is one of the scenarios we are looking forward to this week. So the possibility of price coming back into the structure before the downtrend scenario happen. That is one scenario we are looking forward to. And the other scenario we might be looking forward to this week is an outright breakdown of that demand zone in such a way that price takes out all the buy pressure around this area to give us a bearish signal, after which a retest of structure should be giving us further confirmation to join that trend continuation to the downside. So these are the two scenarios we are looking forward to. So on both occasions, we still have a possible bearish long-term momentum here, but we are not sure how price is going to be relating to the demand zone that we just identified around here. Is price going to move up first to do a retest of structure before the downtrend continues, or are we going to be seeing a situation where a trend continuation pattern is evolved into before the breakdown retest on lower time frame might send price crashing further to the downside? So this is what we are going to be looking at on the lower time frame. So as a result of this, we will be scaling down to the lower time frame so that we can understand what is really going on since the beginning of the week, so that we can make further decision on the US oil. So scaling down to the 1 hour time frame at this point. So this is what we have here on the 1 hour time frame, and looking at what has been happening here in the last 24 hours here, we have a situation where first of all, we have a structure here in the form of a bearish trend line which has been holding selling pressure in the last 2 weeks. And if you look at what we have here after connecting the series of lower highs here, we had this resultant bearish trend line figured out, and we saw the last time price tested this, it was a huge snap which took price right back into the $75 level. So there is a tendency that we might be having a situation where price might respect that bearish trend line one more time in such a way that we have something like this, followed by selling pressure to send price going further to the downside. This is one scenario we also want to take into consideration as we head into the New York session today. Then another situation here is this. If we look at what happened here since Wednesday last week, I was able to identify another temporary trend line here after connecting the series of lower highs. So we saw the first touch here, we saw the second touch, we saw the third one, and then during the course of yesterday's trading session, we saw another rejection of that level, though we had a little break out of that structure. But what this simply tells us is that we have this indecision right here as price was caught within a consolidation phase even after breaking out of that temporary trend line. So there is an indecision in this market right now, and what we want to be doing here is to understand what this indecision phase is going to be insinuating in the nearest future. So when we zoom into that consolidation phase right now, let's see what is really happening around there. Remember, we already have a breakout of this trend line. So is this going to turn out to be a true breakout, or is it going to turn out to be a false breakout? So if it's going to be a true breakout, we want to be seeing something like this: breakout, price comes back to do a retest of the trend line, that's from a technical standpoint, which also lines up with the support level of the channel that we were able to identify since the beginning of the week, followed by buying pressure on our lower time frame. There we could actually join the rally to somewhere around here, or probably the $85 level, where we want to be seeing how price is going to be relating to this trend line. If we are going to be seeing selling pressure on there, then we want to be seeing this as an opportunity to take advantage of another wave of a bearish momentum to the downside. However, if price breaks above, does a retest of structure, then we might be looking forward to an opportunity to add more position to our existing trade. So that is one scenario we want to be looking at this point. Then looking at the consolidation phase we have identified here, is it going to evolve into a situation where it will retest the structure before that move to the upside happens, or is it going to be a situation where price will just start forming selling pressure right below the $80 area to send price crashing back further to the downside at this point. So in order to do this, we want to scale down to a much lower time frame so that we can see what is really happening around here in order to make an informed decision for today. So with that being said, we'll scale down to the 15 minutes time frame, and let's see what is really going on the 15 minutes time frame. So right on the 15 minutes time frame here, the first thing we observe here is that first of all, during the early hours of today, we witnessed a breakout of the $80 level, which is a sign that we might be having a bullish momentum. And that is why I always say that whenever we have a breakout of a structure like this, it's very important that we take into consideration the possibility that it could turn out to be a false one. And in order to mitigate against such unnecessary execution, we want to be seeing a retest of structure to give us a further confirmation that we want to be joining the rally to the upside. So we had a retest of structure here. I actually joined at this point and I shared this on my public platform, and it appears price is right back at our entry zone right around the $80 level. So what I want to be seeing here is this. I might be taken out of this position, we never can tell. Price might likely come back to do a retest of this structure before that move to the upside happen, or we could be seeing a situation where price might actually continue to the upside from this area. So for those who are not still in this trade, I will be suggesting that we enter this trade. We are profitable for this week, so even if we lose out on this opportunity, we're still going to be in profit at this point. So let's take the risk of joining this rally, as we have seen a breakout of the $80 level here. Price has come back to do a retest of structure, though price appear to have come below that structure at this point. But if we get stopped out, it's still okay. And if price continues to the downside and in such a way that we have the situation price comes back, then I will be waiting for price to come back into the $79 level here, which we identify here, and it also shares a confluence with this trend line that I was able to identify around this area. So if we have a situation where price comes into this level or probably come into this bearish trend line, then we might be looking out for buying pressure or a reversal pattern on our lower time frame to join the rally to the upside. But if that does not happen and price continue to trade right below the $80 level, then we want to be comfortable in our buy position on the US oil. So that is one scenario I want to be looking at on the US oil for today. So for selling opportunities here, well, if price continues to the downside in such a way that we finally see a breakdown of the $79 level, like I said, price coming back into the structure, breaking down that $79 level, well, we want to be patient before joining any decline at this point, as we want to see price reject this level, followed by selling pressure on our lower time frame that might likely send price crashing to the downside. And if that happens, we want to be joining that decline into the take profit target, which we identified yesterday. And so there's something that is looking a little bit complicated around here, that is somewhere around here, but it's very, very simple to understand, and this is it. Now what we are looking forward to here is to see if to buy. Price might come back here, buying pressure, climb above the $79 level, then we want to buy. But if price drops below this structure, and instead of climbing above the $79 level instead, then we start seeing, though if it climbs above, then we, instead of waiting for price to do buying pressure around the edge to join to the upside, instead of that, price continue to find selling pressure right below the structure, then I want to be seeing this as a sell signal to join that decline to the downside. But if price climbs above the $79 level, multiple buying pressure around this area, then we want to be seeing that as an opportunity to buy the US oil. So this is the scenario I will be looking forward to at this point. So like I told you, I'm already in a trade right now with about 70 pips stop loss. So let's see how this plays out in the next 24 hours, and we shall be coming here tomorrow to do a review of what this is going to be giving us. So far for this week, we have been very profitable on the US oil. So let's take some risk and see how this plays out as price action is being monitored. So if you have any question regarding what I've just talked about, feel free to drop in your inquiries in the comment section of this video. So let's deliberate this together. So I'll be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next pair. So we have 1024, good morning. We have 208, good morning. All right, so we have okay, Danny, hi, how are you? Okay, Totinsa, all right, thank you. All right, so in the absence of no questions, I want to assume that this is well understood. So let's move on to the next pair, and the next option we are going to be looking at is the US tech. And on the US tech, we had the scenario yesterday, remember? Hold on a second, let's go back to our 1 hour time frame, and let's quickly do a replay of what our expectations were as at yesterday. So as at yesterday, we were around here after taking advantage of the selling pressure right below the $11,700 level. And like I told you yesterday, this is a follow-up analysis to our last week buyers, where we've been on a bearish momentum since last week on the US tech, and this is just going to be a follow-up, and we'll continue to look out for selling pressure as long as price continue to trade right below the bearish trend line that we got figured out during the course of last week trading session. As you can see here, price has continued to trade right below that level, and in as much as price continued to trade right below that level, we continue to look for selling pressure, selling opportunities at this point. So during the New York session yesterday, we finally saw the breakdown of the $11,600 MAC area here, and a breakdown retest of structure would obviously give us a signal that it's time to sell again. As we can see, price has been on a long-term bearish momentum, at least since last week. So we started seeing selling pressure right below the $11,600 level, and I actually joined that trade. And when price moved in my favor, move my stop loss to break even at this point, and it appears price is back to our entry zone at this point. So with the current structure here and looking at what we have here since the latter part of last week trading session, I can see here that the $11,500 area appears to have been a buy pressure for us in the last couple of days now. So let's identify that level first of all, and we limit the demand zone. So for the sake of clarity, we shall be naming this area our new demand zone for the week. So hold on a second, let me quickly do this. So we have a demand zone now figured out at around the $11,500 level. And the reason why we have identified this level here is very obvious. As we can see, since the later part of last week, we saw how buying pressure has been negating all selling attempts to push price further to the downside here. So we had another one happen here yesterday. I think during the later part of the New York session, we saw another buying pressure here. And during the course of the in the last 2-3 hours now, we saw another engulfing candle taking price right out of that structure. So at this point in time, it's looking at safe price is gathering bullish momentum at this point, as we saw how selling pressures continue to reduce here, and the $11,500 area appears to be consistent in rejecting all buying pressure at this point. So what I'll be advising us to do here is, for those who are taking advantage of this opportunity here, should be moving their stop loss accordingly to somewhere right above the $11,600 mark. I think I told you that yesterday. So let's place our stop loss right above that level so that we can protect our position against any sudden pullback that might likely happen at this point. So no more selling right below the $11,600 mark here. And the reason why we are not selling is simply because all of the demand zone we have identified here. So what we want to be seeing here to continue to sell or to add more position to our existing trade is to see a bearish signal in such a way that price breaks down this demand zone, taking out all the buy position around here to give us a further signal that the sellers are still in this trade. So if this breakdown happens, remember, we are not getting too excited. We want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of the demand zone, or probably the $11,600 area, or it could go as far as the trend line here. Then we look out for selling pressure on our lower time frame, then we could join the decline to the downside. So as long as price breaks down this the $11,500 area, that is taking out all the buy positions here, then I want to be confident that there is still a tendency for price action to move further to the downside on this one. But if a breakdown of this level does not happen, well, like I have said, let's hold on any idea of selling the US tech at this point in the market. So with that being said, let's look at the other perspective here. Remember, you have moved your stop loss accordingly to around 11,600, and let's see if this demand zone is going to finally mature into an impulsive move that might take price out of the structure. So in order to buy this one now, what I'll be advising us to do here is to be using the $11,600 MAC as our neckline for this reversal, this potential reversal pattern here. So we have the neckline area here, and you can see since the beginning of the week this level has been a major determinant of price action. So what I want to be looking forward to here is an outright breakout of that structure here on the 1 hour time frame, with my follow-up with a probably retest of structure with buying pressure right above the $11,600 level to incite another wave of a bullish momentum to the upside. So this is what I will be looking forward to buy the US tech. So if price does not break out the $11,600 level to the upside significantly, well, I wouldn't be buying this. So let's see if this is going to happen. And remember, if it happens in such a way that price retests this trend line, remember this trend line is what has been guiding our selling opportunities here on the US tech. So if price comes back and we start seeing buying pressure here, the most important thing is that we want to be seeing buying pressure above the $11,600 area to be to confirm that we should be getting ready to buy the US tech. And for the selling opportunity, I've told you, I said we shouldn't be thinking of selling anymore right now. Move your stop loss on your previous trade to somewhere above the 11,600, and we want to be seeing a breakdown of the demand zone, taking out all the buy position here, retest of structure to incite a further move to the downside on this one. Now, where will our take profit target be for the selling momentum here? We've identified a structure around the $11,450 level and the $11,000 MAC area, which is our buy zone. And how did we get to how did we go decided how did we sorry how did we get to this level of identifying this buy zone? Well, this TP target, well, we brought out our Fibonacci retracement tool, taking into consideration this last impulse leg that started last week. Then we ran it through the previous impulse leg here, and the area between the 50 and the 78.6% area was identified here, and this is where we said we are going to be looking at as our take profit target zone. And this area also will be serving as a potential buy opportunity area for the second wave of that bullish momentum that started here last week. So let's see how this plays out in the next couple of hours. And if you have any question regarding what I've just explained here on the US tech, feel free to drop in your inquiries in the comment section. So with that being said, let's move on to the next pair. And the next pair we are going to be looking at is, okay, I'm just trying to read through the chat and see if there are any questions. Okay, Steamroller, I'm glad you're around, and I want to take that as a compliment. All right, you're welcome, Steamroller. Hope you're having a wonderful day at work. All right, so let's move on to the next pair, and the next pair we are going to be looking at is the EURUSD. And on the EURUSD, we have been having a situation here that might be giving some people a lot of headache, because I've been getting a lot of messages on my public platform regarding how to manage this trade at this point. And if you remember yesterday, we identified this reversal pattern after seeing a choppy situation here during the course of last week's trading session, as price has been consolidating right within the 1.04450 level and the 1.031 150 area throughout the course of last week trading session. So we saw the situation here, and I also stated here yesterday that the structure that we have here is looking more like a reversal pattern, where the 1.03150 level will be serving as the neckline of that structure. And whenever we have a reversal structure like this, what we're expecting is that price will break down the neckline to give us a signal, and if possible, price might likely come back to do a retest of that structure, followed by selling pressure on our lower time frame to give us that leverage to join a further decline to the downside. And with the way things are going right now, though we enjoyed this move to the downside here yesterday, and price moved with about how many pips in our favor yesterday, with about 80 pips in our favor before we started seeing price coming back into our entry zone one more time. And at this point in time, many people are panicking that is the selling momentum diminishing here. Well, at this point, I would say as long as price still remains right below the 1.03 150 level, that is around this area, we shouldn't be panicking with our sell position. For me personally, I moved my stop loss to break even, and price is yet to come into my entry zone at this point. And even the way things are going, for those who missed out on this opportunity here yesterday right below the 1.03150, well, I think you should be excited that market is likely going to be giving us a second chance to join that decline to the downside, and which I'm looking at a possible situation where price might likely come back into the 1.03150 level, a level which was broken during the early hours of this week, after which selling pressures right below this area on our lower time frame will be inciting that second wave of that bearish momentum that we have been anticipating. So this is what I'm still looking at, and to make our job easier, I was able to identify another parameter in the form of a bearish trend line, which you can see on your screen as a purple dotted line. And I was able to identify this as a result of connecting the series of lower highs here. As you can see, we've been witnessing selling pressure here since the beginning of last week trading session. So we were able to connect this. Though we've been seeing that selling pressure, but the 1.03150 level has been negating that selling pressure until the early hours of the week that we finally saw the breakdown of that structure. And for me, this is a very good sign that the sellers are still very, very strong in this market. So let's continue to look out for opportunities to add more position to this trade, or probably join this trade outrightly. So as price is moving towards this trend line, let's continue to wait for selling pressure around this area, around the 1.03150, and the bearish trend line here to join the decline to the downside. And if you look at the structure very closely, you can see how the trend line and the neckline area at the 1.03150 shares a confluence at this point, making that area a very significant level to look out for selling pressure from this point. Now, if a breakout of that trend line happens, what is going to be our next plan? Well, if a breakout of that structure happens, that is, we see a breakout of the neckline, breakout of the bearish trend line, well, I will be advising you not to get too excited, as this could actually be a false breakout. And what we want to be seeing to ensure that a bullish momentum have come to stay is if price comes back to do a retest of structure, followed by buying pressure right above the 1.03150 level, then we want to be seeing that as a signal that buyers have come to stay. But if this does not happen, we continue to look for selling pressure here. Now, talking about the breakout of the bearish trend line here, there is a tendency that we might be having this as a retracement of that impulse leg that started here last week. We saw this impulsive move that brought price back into the 1.02210 level. And if we are going to be looking at this from a technical standpoint, bringing out our Fibonacci retracement tool, running it through that previous impulse leg, and looking at our golden zone area, which falls around the 78.6 and the 50% area of the previous impulse leg, we might still be having a sell window around that area. So what this simply means is that even if we have a breakout of that trend line, we shouldn't be jumping into buying outrightly, as we still need to wait for further confirmations that will be guiding our action. So there is a tendency that even if we have a breakout of that structure, we still have a selling window right around the 1.03750 level, a very important key level. Remember, we identified this on the daily time frame. I will be showing you that in a moment, where we might be seeing selling pressure around this area to send price crashing further to the downside. So even if a breakout happens, please don't get too excited. We are still in a situation that is likely yielding selling pressure at this point. So now, talking about the 1.03750 level, let's scale up to the daily time frame, where I will be showing you, and let's all have an holistic perspective of what our expectations are on the Euro USD. Now, looking at the daily time frame here, you can see how in the last 2 years here, price has been on a long-term bearish trend line, and as a result of this, I was able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen. Now, the most important structure that we have here on the daily time frame is the 1.03750 level, a level which I showed you on the 1 hour time frame a couple of seconds ago, and I told you how that level has been a major determinant of price action, at least since the month of May. Look at how this level was holding buying pressure at one point in time. We saw the same thing happen here in the month of June before sellers negated all buying pressure here, leading to a final breakdown of the 1.03750 level during the month of July. And since the month of July, price has been trading right below that level. As you can see, multiple rejection of that level, emphasizing the strength of the sellers at this point. And look at what happened here in the last 2 weeks, and in fact throughout the course of last week trading session, we saw that as soon as price got into the 1.03750 level, which also shares a confluence with the bearish trend line that we figured out earlier. Remember, we had this bearish trend line figured out. We can see price is right around that trend line again here during the course of last week, and we saw a situation where price action evolved into a reversal pattern just around the 1.03750. Now we had the breakdown of the neckline of that reversal pattern. So there is a tendency that price might come back to do a retest of the structure, which I shared with you on the 1 hour time frame. Like I said, the possibility of price coming back into the 1.03750 level is still very possible here to incite that wave of bearish momentum that might lead price action back into the $1 mark, the very important key level that has been holding selling pressure for over 2-3 months now, and also that level lines exactly with the bullish trend line that has been holding buying pressure since the later part of the month of September. So if price comes into this level, we want to be looking out for buying pressure here to join the second wave of that bullish momentum to the upside. So this is what the reason why I'm showing you this is to make you remove the fears that maybe a bullish momentum is coming at this point, because I've been receiving messages in that regard anyways. So there is still a likelihood that we could be having selling pressure here, so let's remain calm, move your stop loss accordingly, and if price comes back into this trend line or the 1.03750, selling pressure right below that level is another good opportunity to add more position to our existing trade. So let's go back to the 1 hour time frame and let's see what I just showed you here on the daily time frame, on the 1 hour time frame. So like I said, we already have this sell window identified around the 1.03750 level here. So even as price is going to the upside, we need not worry ourselves, as there is a tendency that price might be doing a retracement of the impulse leg that started last week. So now, with this being said, where will our take profit target be? Well, like I showed you on the 1 hour on the daily time frame, let's place our take profit target at around the $1 mark, which is a long-term goal of about 300 pips to catch if price moves in our favor. And the reason why I said this is because of that structure that was broken, remember. And whenever we have a breakout of a structure like this, we expect that price is likely going to come back and do a retest of that structure. So with that being said, another thing I try to figure out here is bringing my Fibonacci retracement tool, running it through the previous impulse leg here, and locating our golden zone area right within the 50 and the 78.6%. This is an area where there is a tendency that price might come into this area to evolve into what I will call a reversal pattern that will be sending price going to the upside one more time. Hold on a second. I'm trying to Okay, so like I was saying, uh-oh. So like I was saying, we've identified that level as a TP, as our golden zone area, and this area could turn out to be an area where we could be seeing reversal pattern that will inside the second wave of that bullish momentum. So what I'm saying here is, despite the fact that we have our TP target around here, we will still want to monitor how price action will relate to the structure. So if we start seeing buying pressure around this area, definitely we want to move our stop loss to lock in some profit and get prepared to join that bullish momentum if it finally happens. So this is what we will be looking forward to on the EURUSD as we head into the New York session. And what if price does not climb further to the upside? What if price does not come to this far and we start seeing a situation where price just continue to drop to the downside? Well, in order to take advantage of that move, let's bring out our line chart here and connect the series of lower highs here. As you can see, since yesterday, we have been witnessing price finding higher lows, which at this point, I am saying it as a retracement of the previous impulse leg, remember? So if we have this trend line figured out here, and during the New York session today, we witness a breakdown of this trend line, then that is a signal that price is going further to the downside. That is, price is no longer going up here again, and then we will look out for a retest of structure here to join the decline to the downside. So to make things more easier, we also have a structure around here, around the 1.02700 level, which I will be figuring out for us so that we find things easy to be able to take advantage of that opportunity when we see a retest of that structure. So let me put this right at the top right hand side of the let me make this a little bit smaller. So if during the New York session today we see a breakdown of the trend line, well, wait out for retest of structure, retest of the 1.02700, then you could join the decline to the downside. So this is what we are going to be looking forward to on the EURUSD. So if you have any questions, feel free to drop in your inquiries in the comment section. So let me see what is happening here before we move on to the next pair. All right. Simrilla. All right. Okay. Good morning, 187. All right, Dino, you're welcome. Okay. 607, you're welcome. Okay, so in the absence of no question, we just move on to the next pair. So the next pair we are going to be looking at today is the XAGUSD, which is the silver, and there is another panic in this market too, as well as bullish momentum has been discovered since the beginning of the week. And though we took advantage of some sell momentum here yesterday morning, but price came back to our entry point, taking us out of that position at break even here, and since then price has continued to find higher highs and higher lows on the XAGUSD. So what are we going to be looking at when we head into the New York session today? Well, the first thing I'll be showing you here on the 1 hour time frame is the fact that we have a bearish trend line which has been guiding selling momentum since last week trading session, and I was able to connect the series of lower highs here to give us that bearish trend line. So that was the first structure we are going to be using as our yardstick for trading activity for the New York session today. So we have a trend line figured out around that area, which also lines up with the sell window I was able to identify here. So if price continues to the upside, there is no problem. We want to remain patient and wait out for our structures to mature before we want to be taking advantage of another wave of a bearish momentum here. So if price comes back into the sell window here, or probably around the bearish trend line with followed by selling pressure on our lower time frame, then we want to be joining that decline to the downside from that area. And if you are a counter trend trader, you might want to take advantage of the buying opportunity right above the $21 level here, with the take profit target sitting right around that sell window that we have here. So this is more or less a counter trend opportunity. So if you are taking advantage of that move, let's see how many pips that will give you if you already joined from this level. Price, we have a minimum of about 300 pips. Okay, sorry, minimum of 30 pips and a maximum of about 72 pips to catch here if price continue to do that counter trend opportunity to the upside. So well, for me personally, I wouldn't be advising that, but if you are a scalper, you're a counter trend trader, you will be looking at your lower time frame to take advantage of that counter trend opportunity. Let's see what's happening on the lower time frame. So you might be looking at joining at the breakout retest of this structure here at the $21.20 level, which you can see here on your screen. So if a breakout retest of that structure happens as a scalper, you might want to be taking advantage of that buying opportunity to the upside. That is for those who had missed out on this one. But for me, I would be advising you as a long-term trader, which I am, I will be advising that we remain patient and wait for price action to come within our sell window, where we want to be looking out for selling opportunities from that area to join the decline to the downside. So that is the scenario I will be looking forward to on the XAGUSD. Then the second scenario for selling opportunity here is what happens if price does not go to the upside here, and instead we started seeing selling momentum during the early hours of the New York session in such a way that price breaks down the $21 level one more time. Well, for me, if that happens, then what we have here is like a reversal pattern in the form of this impulsive move to the upside. Price comes back into the $21 level, which will now become the neckline of that structure. We have another touch here, then a breakdown of that neckline, retest of structure can be confirming that it is ready to sell the XAGUSD. So we have two scenarios for selling opportunities here. The first one is from this level, that is from either the bearish trend line or the sell window here to join the decline to the downside. And the second scenario is a situation where a breakdown of the $21 mark happens, retest of structure, then we could join the decline to the downside from that level. So that's the two scenarios we want to be looking at to join a selling momentum here. Now, before I close this, let's quickly run through what is happening on the daily time frame so that we can have an holistic view of what is really going on in this market, after which we call it a day on this pair. So going on to the daily time frame, what do we have here? So on the daily time frame, the first thing we observed on the daily time frame was the fact that price has been on a long-term bearish momentum since the beginning of the year. And I told you how I was able to identify two parameters to guide our action. The first one is this bearish trend line you can see on your screen. After connecting the series of lower highs here, though we had the breakout of the structure here, but in the month of April, price came back down, and since then price has been trading right below that trend line. So that is the one, that's the first one. Then the second one is the descending channel here. After connecting the series of lower lows and lower highs here, we had this bearish trend line figure out. So there are two things that happened here a couple of weeks ago on this, sorry, is it a couple of weeks ago or 3 weeks ago thereabout? We saw both the breakout of the resistant level of the channel and the breakout of the bearish trend line, which took price into the $22 level. That was a massive and huge impulse leg which took price to the upside there. And from a technical standpoint, whenever we have an impulse leg like this, at one point in time we expect that price might likely do a retracement back into the golden zone to incite another wave of a bullish momentum around this area. So as a result of that, we identified our golden zone here between the $20.20 level and the $19 area after using our Fibonacci retracement tool, locating an area between the 50 and the 78.6. So that's how we got that level. So we are still looking for certain opportunities to come. We are still looking for a sell position to come back into the structure. So that's what we are looking forward to before the second wave of that bullish momentum happens. So that is one scenario we are looking forward to. Then the other scenario is this. You can see that price has broken out of the bearish trend line here. So we saw the breakout of the bearish trend line here, and from a technical standpoint, whenever we have a breakout of a structure like that, we expect that price might come back to do a retest of that structure at one point in time to incite another wave of a bullish momentum. So the other possibility here is that, so if we look at what has been happening here since last week, we can see we've been witnessing buying pressure right above the $20.70 level to incite another wave of a bullish momentum. So will this happen Well, we don't know yet. So what we want to be doing now is to go back to the 1 hour time frame. Let's figure out what is really happening around here. That is between the $20.70 level and the $21 area, which is an area we shall be looking at how participants in this market has been relating to this level since the beginning of the week to make further decision. So going back to our 1 hour time frame here, so this is the level we identified on the daily time frame. That is an area between the $21 level, which is here, and the $20.70 area, which is around this level. So this was the channel price action was oscillating within since the beginning of the week before we witnessed that breakout of that structure. So we had the situation here, and this is looking more like a reversal patterns anyways, but I'm of the opinion that let's see how this plays out because of this trend line that we have here. And if price does if we sell and price continue to come to the downside here, what we're going to be doing here is that as soon as price comes back into the $21 level here, we move our stop loss accordingly. That is for the sell position taken right from this area. We move our stop loss accordingly to lock in some profit, probably right above the $21.20 level. Let's see how price action relates to the structure here. If we see buying pressure around this area, then we want to know that this is going to be a bullish momentum. And if a breakdown of that structure happens, that is the $21 level, retest to structure, then we want to be seeing this as an opportunity to add more position to our existing trade. So this is my view here on the XAGUSD. I hope I was able to simulate the possible scenarios that will likely happen, and I hope this was helpful in helping you to make your own decision on the silver. So with that being said, I want to move on to the next pair, and the next pair we will be treating is the GBPUSD. And on the GBPUSD, remember yesterday we have been looking for selling opportunities here on the GBPUSD, and it appears we have been taken out of our position with some profit because we saw the situation here as price. We took advantage of this move here and respecting that bearish trend line one more time, which gave us about how many pips in profit? Over 100 pips in profit before we started seeing this buy momentum that took price right back into the entry zone at this point. So with the situation of things right now, how do we intend to trade the GBPUSD for today? Well, looking at what we have here on the 1 hour time frame, we have a simple setup here that I was able to identify. The first one is this bearish trend line. After connecting the series of lower highs here, we saw selling pressure here since the beginning of last week trading session. We saw how this trend line has been holding selling pressure. We saw the breakdown retest here of the 1.1900 level, taking price to the downside. And in the last how many hours now, in the last 9 hours now, we can see price has come back to do a retest of that bearish trend line. And since the retest of that trend line happened, we saw our price has been caught within a consolidation phase around that area. And at this point in time, things are looking a little bit dicey, as we don't know if price will continue to the upside, or we're going to be seeing this as a false breakout that might likely send price break down the 1.17600 to push price further to the downside. So what we are going to be looking at here is to remain patient and wait out for this price pattern to evolve or mature to a possible formation that will give us a clue of where price is heading towards. And remember, I told you that we have an economic event coming up tomorrow, which is a very strong and major event. Hold on a second, let me quickly show you. Hold on a second. Okay, so we have tomorrow on Wednesday, we have the S&P Global CIPS Services PMI coming up tomorrow. That's for the pounds. And for the dollar, we have the durable goods order and the non-defense capital goods and the almighty FOMC minute coming up tomorrow. So we have quite an array of events that will be serving as a catalyst for price action on this chart. So as you can see now, we can see the reflection of this anticipation on the chart as a consolidation phase around here as the indecision in the market increases at this point. So I will be advising us to remain patient on the GBPUSD. We've been taken out of our position at this point, so let's remain patient and see how this is going to play out. Are we going to be having a situation where this might end up in an engulfing candle taking us out of that structure, after which we wait out for a retest of structure, buying pressure right above the 1.183750 level to incite another bullish momentum? So that's a possibility we're going to be looking at on the GBPUSD for this week. And then the other scenario is price breaking down the 1.183750 retest of the structure to incite a bearish momentum to the downside. So these are the scenarios I want us to be looking forward to, and the reason why I'm saying this is simply because when the economic news comes up tomorrow, it will have happened before the live session. So let's get ourselves prepared for these possibilities that might likely happen around this area. So at this point in time, we're already out of this trade at a small profit, and let's wait out for price action to give us that leverage to join either a sell or buy at this point. So like I said again, let me repeat that. So we are looking forward to a significant breakout of that structure, price coming back to do a retest of that trend line, followed by buying pressure right above the 1.18375 level to join the rally to the upside. And if a breakdown of the 1.18375 level happens, then a retest of structure should be giving us that leverage to join the decline to the downside. And if a breakdown of the 1.17600 happens, a retest of structure should be giving us further confirmation to add more position to our sell position here on the GBPUSD. So this is my scenario here on the GBPUSD, and I hope I was able to make things clearer enough for you. All right, it's already 12 on the dot. Let me see if I can quickly run through the XAUUSD, please. I think I promised Innocent Baby yesterday that I will be doing something on the XAUUSD today. So let's quickly run through this and let's see what is happening here. So on the XAUUSD, that's the gold. I will just run through the, okay, let's quickly go through the daily time frame on the XAUUSD. So on the daily time frame here, we have the scenario figured out here. Since the beginning of the year, hold on a second, let me use this other chart. So since the beginning of the year, we have a situation where price has been trending on the downside, and we have this bearish trend line figured out after connecting the series of lower highs here. Excuse me, I have to take some water. So we saw the bearish trend line figured out here, and the most important structure on the XAUUSD is the $1,786 level. And this level, if you look at the structure we have here since the beginning of the year, we will notice that this 1,786 level has been a major determinant of price action. Look at what happened here at the beginning of the year. We saw how this level was holding buying pressure at one more time, which lasted for about 2 months before we saw this impulsive move to the upside. And in the month of May, price came back into that structure. We saw another attempt by the buyers to push price to the upside, but this was negated by selling pressure from participants in this market, which finally led into the breakdown of the $1,786 level during the month of July. And since the breakdown of the 1,786 level happened in the month of July, we have seen that price has continued to trade right below that structure to emphasize the strength of the sellers at this point. Though we had a breakout of the trend line here during the first week of this month, which also lines up with a very important key level at the 1,680. But one thing that happened here is that when price came back into that 1,786 level, a level which has memory for selling pressure in the past, we can see that it was rejected one more time during the course of last week's trading session to signal another wave of a bearish momentum. And as a result of this, I was able to identify this area as our supply zone going forward. So it's going to be serving as our supply zone unless price breaks out of that structure to move price to the upside. But if that does not happen, it will continue to remain as our supply zone. So now, with this being said, the next thing we did here was to take into consideration this impulsive move that started at the beginning of this month. We saw this impulsive move which took price into the 1786 level, and we all know that at one point in time, whenever we have an impulse leg like this, at one point in time we are going to be seeing a retracement phase, which is going to be as a result of profit taking activities. That is, those who took advantage of this impulse move will want to be taking some profit at this point, and this is going to be reflected on the chart in the form of a retracement phase, which is likely going to be happening here. As we can see, selling pressure right below the 1786 is probably sending that signal already to the downside. So now the question is, how far will this retracement phase go before another wave of a bullish momentum happens? So to get this trade, what we did was to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, and we want to be identifying our golden zone area, which is going to be falling right within the 50 and the 78.6% of the previous impulse leg. And if we do that, we should be having somewhere here. Let me label this area for the sake of clarity. So we should be having somewhere around here has our take profit target zone for selling momentum here. That is, the retracement phase is likely going to end around here before we start seeing buying pressure that might incite another wave of a bullish momentum. And if you look at the buy zone area here, it shares a confluence with that very important key level at the 1680 level. Remember how this key level has been holding trading activities for us in the last couple of months here, and we might be seeing price come back to do a retest of a structure that was broken during the early days of this month to incite another wave of a bullish momentum. So that is what we are looking forward to on the XAUUSD. So now the question is, how do we join this retracement phase that is already happening at this area? So we need to scale down to a much lower time frame so that we can understand what is really going on around here, as price action is still right above the 1730 level, which was broken. So we don't know if the structure is going to hold buying pressure, or we are going to be witnessing a breakdown retest of that structure to push price back into that buy zone before that wave of bullish momentum happens. So in order to have a better understanding of what is really going on around there, we want to be scaling down to a much lower time frame, like the 1 hour time frame, for instance, or the 2 hours time frame. Let's say that for the sake of this video. So we have the 2 hours time frame figured out here, and as we can see here, I took advantage of an opportunity here right below the 1744 level. And the reason why I took advantage of that opportunity there was this. If we look at the structure here, look at what happened here since last week. So throughout the course of last week, we saw our price was caught within the consolidation phase of the 1786. Remember the level 1786, that level, that very important key level we identified on the daily time frame. We saw selling pressure as soon as price tested that level, and we saw buying pressure at around the 1755 level. So price was caught within a consolidation phase throughout last week trading session. And when we look at the structure here, it's looking more like a reversal pattern, something like what we saw on the EURUSD chart. And so we have this reversal pattern figured out, and the 1755 level serving as a neckline of that reversal pattern. And when we look at what happened here during the later part of last week's trading session, that is on Friday, we finally saw the breakdown of that neckline to give us a signal that this is a confirmed and mature reversal pattern. And we had this move to the downside as we saw the selling pressure push price right back into the 1730 level, moving about, how many pips is that? Over 2,500 pips thereabout. And when we have a breakdown of a structure like this from a technical standpoint, we expect that one point in time price is likely going to come back to do a retest of that structure to incite the second wave of that bearish momentum after citing selling pressure on our lower time frame. So we took advantage of this bearish momentum here, and price climbed back up again, taking us out of our position at this point. And there is some panic in the market right now. Is that is this going to be the second wave of a bullish momentum? Well, at this point in time, I will say no, because my structure is not saying that at this point, as we are still right below the neckline area at the 1755 level. So what I'll be looking forward to is this: if price continue to climb to the upside here, well, I will be looking forward to price coming back into the neckline area, evolving into a reversal pattern, followed by selling pressure on my lower time frame. Then I could actually join that trend continuation to the downside here. So that is one scenario I will be looking forward to for this week. Then the other scenario is if price does not continue to the upside but instead drops further to the downside, then a retest of the 1744 level should be inciting a bearish momentum, and if a further breakdown of the 1730 level happens, retest of structure should be sending price further to the downside. And remember, we identified the 1680 level where we said the buy zone we are looking forward to lines up with that area. So let's see how price action relate to that structure, and let's see if the second wave of the bullish momentum will be starting from this area. So this is what I will be looking forward to on the on the XAUUSD. And in order to make our job easier for during the New York session today, as we continue to look out for selling opportunities here on the XAUUSD, I will be identifying the sell window range that we will be looking forward to. So if we bring out our Fibonacci retracement tool, run it through the previous impulse leg here, we should be having an area between the 78.6% and the 50% of the previous impulse leg as an area to look out for selling opportunity, even if price breaks above the neckline area. So we have the sell window figured out here. So let me label this for the sake of clarity. So we have the sell window around this area. So even if price breaks above the neckline area, we could have a sharp move that might push price above the structure, evolve into a reversal pattern. Then we could get ready for another wave of a selling opportunity. And if a breakdown of the neckline happens, retest of structure should be welcoming additional position to this existing trade. So what we are seeing in the market right now is an anticipation of the major events that I was able to identify here on the economic calendar. So let's see how this anticipation is going to reflect on the chart. So we already have a scenario we are looking forward to at this point. So let's see how this plays out. And for those who like taking counter trend opportunity, well, let's see if we can hold on a second. For those who would like taking let's see, hold on a second please. All right, okay. So for those who would like to take counter trend opportunity, somewhere right above the 1744 level could be a very good area to look out for. We already have a breakout of that structure. If price comes back to do a retest of that level followed by buying pressure, then you could actually join that buy opportunity with a take profit target within the sell window area, where we have said we are going to be looking for selling opportunities from that level. So this is what we are going to be looking forward to on the XAUUSD. I hope I was able to make myself clear. So on this note, I want to call it a day, but before we do, let's quickly do a quick recap of what our expectations are, and for the sake of those who missed out at the beginning of the session. So with that being said, let's scale back into the US oil. So we started the day on the US oil, and I told you how I already took advantage of a buy opportunity here, and I told you also to take advantage of that move. As we can see what has been happening here since the early hours of today, we saw our price has been finding buying pressure right above the $80 area, and I told you it's a risk that is worth taking. Let's take that risk, and with our take profit target somewhere around the $85 level, which is a very important key level that we identified on the daily time frame. And I told you one thing here is that as soon as price gets into this bearish trend line here, we should be moving our stop loss accordingly to lock in some profit, so that we don't get caught up in any sudden pullback that might likely happen around this area. And if we look at the bearish trend line here, it also lines up with the structure here at the $82 level. This is a resistant level that has been holding selling pressure at one point in time. So we have it at the $82.40 level. Let me label this area for the sake of clarity. So we have the $82.40 level here. So let's see how price action will relate to that structure. If we are going to be seeing a reversal pattern from there to same price crashing to the downside, or we are going to be having a breakout retest of structure, and if that happens, we want to be adding more position to our existing trade. So that is the scenario we are looking forward to. And remember, we are already in profit on the US oil. We took advantage of this bearish move yesterday, which fetched us about 360 pips. And even if we get stopped out from this one, it's not a bad situation at all. Then we went on to talk about the US tech, and on the US tech we had a situation where we have been looking forward to selling opportunity since last week, and we took advantage of a bearish momentum here yesterday, and price has been moving to the downside here in our favor. And one thing we noticed is that we took another opportunity here, but price took us out at break even at this level. And one thing I said for those who took advantage of the sell opportunity here last week or this yesterday morning, we should be moving our stop loss to somewhere around the $11,600 level at this point in time, and let's see how price action will play out. And one thing I also stated here is that don't sell the US tech at this point. If you have a running position, just move your stop loss, lock in your profit. If that position is still running since yesterday or last week, lock in your profit, and let's see how price action plays out. And the reason why I said you shouldn't be selling yet is because of this demand zone that we identified here at around the $11,500 area. As you can see, buying pressure has been noticed here, negating all selling pressure at this point. So what I said here is that let's see if sellers are going to take out the buy position here, which might likely come in the form of a breakdown of the structure. And if that happens, a retest of structure should be giving us a leverage to join that decline to the downside. So this is what we are looking forward to on this one. And then to buy the US tech, I said we want to see a situation where price takes us out of our sell position, breaks out of the $11,600 level with an engulfing candle, after which a retest of structure followed by buying pressure right above the $11,600 mark should be giving us a confirmation to buy the US tech. But if this does not happen, we continue to look out for our selling opportunity, hold on to our position, our sell position from here in. Now we went on to talk about the EURUSD, and on the EURUSD I told you how we are continuing to look forward to selling opportunities here, and we shouldn't be concerned about this move that is going to the upside here, as the tendency of a selling momentum is still very possible here, considering the fact that we saw the breakdown of the neckline of that reversal pattern that we noticed here on the 1 hour time frame. Remember, we had this reversal pattern figured out, so we saw the breakdown of the neckline. So there is still a tendency that price might come back to do a retest of the neckline area, which also shares a confluence with the 1.03150 level to incite another wave of a bearish momentum. And I also stated here that even if we have a breakout of this bearish trend line to the upside, we still have the 1.03750 level, which is a very strong selling niche that has been holding selling pressure on the EURUSD in the last 3 to 4 months now. It's still an area we could still look out for selling pressure to join the decline to the downside. And I also stated here that if price does not go to the upside during the New York session, and instead we start seeing price plunge further to the downside, then a breakdown of this temporary bullish trend line is a signal. Then a retest of structure should be giving us a confirmation to add more position to our existing trade. Then we went on to talk about the XAGUSD. We also have a similar scenario with what we have here, and I told you that I'm still expecting a bearish momentum here on the XAGUSD, and to help our trading activities for today, the first parameter I was able to identify here is this bearish trend line, and I said I'm still looking forward to price coming within this bearish trend line or within the sell window here, followed by selling pressure to join the decline to the downside. That is the first scenario for selling opportunities here. Then the second scenario for selling opportunity here is if price does not go to the upside, and instead we see price break down the $21 level, very important structure which we identified on the daily time frame, and a retest of that structure happen, followed with selling pressure on our lower time frame. We want to be joining that decline to the downside. Now, for those who are counter trend traders, we said you could actually take advantage of this counter trend where price is climbing to the upside. So we have the situation where price has already broken out of the $21 level, retest to structure, and you could be joining the decline, the rally rather, to our sell window area, where I said we are going to be looking for selling opportunities to join the decline. So if you're not a scalper, you are not a counter trend trader, well, I'll be advising you to remain patient and wait for price action to come into the sell window here, hold this bearish trend line, and we'll be looking out for selling pressure to take advantage of that bearish momentum. Then we went on to talk about the GBPUSD, and on the GBPUSD too as well, we are looking forward to selling opportunities on the GBPUSD. And one thing I stated here is that we're already out of this trade already with some profit, and one thing that I stated here is that we should remain patient and let's see how price action will play out at this point. So now we already have a breakout of this trend line, and so I said let's remain patient and wait for price to come back, do a retest of the structure, followed by buying pressure right above the 1.183750, then we could join the rally to the upside. And if a breakout of the 1.190 level happens, retest of structure followed by buying pressure on lower time frame, we could join the rally to the upside. So to sell this, we are still looking forward to price coming right below the 1.18350 level to continue a selling momentum here on the GBPUSD. Then the last pair we talked about today is the XAUUSD, and on the XAUUSD we have a similar scenario with what we have on the major pairs, and we have this reversal pattern figure out. Price breaks down the reversal pattern at the neckline area, which we have identified at the 1755 level. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price is likely going to come back, do a retest of structure. So I've identified a sell window around here, evolve into a reversal pattern with selling pressure on lower time frame. We could join the decline to the area to the downside from that level. So counter trend traders, if you want to take advantage of the breakout retest of the 1744 level, you could be having your take profit target within this area at this point. So let's see how this plays out in the next 24 hours, and we shall be coming back here tomorrow to do a review of what price action has given us so far. So on this note, I want to call it a day. I really appreciate every single one of you. It has been a wonderful moment here, and I wish you best of luck during the New York session today. And the one thing I always say is this: don't get too excited whenever price action give us a signal, which might likely come in the form of a breakout or breakdown of a structure. We want to scale down to our lower time frame, look out for a retest of that structure, then we can finally join either the decline or the rally, whatsoever the case may be. So do have a wonderful evening. I wish you best of luck during the New York session today, and I look forward to see you same time tomorrow, 10 a.m. West African time, 10 a.m. UTC, 11 a.m. West African time, and let's come here again on the Extra Speed Live app to analyze and get ourselves prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.